Hello and welcome to the daily trade wrap-up for March 11th, Friday, March 11th, 2022. I'm pretty much done, so I was just going to do this wrap-up and start my weekend early. Yesterday, we bought this breakout in the Australian dollar because we had that two-bar formation that broke higher. I held some of it overnight, and that was a bad idea. It it's not doing anything significant. This is an inside bar, but it's sloppy enough that it took out my stop on that. The other thing we were watching yesterday, carried with us, was this natural gas long, and our goal was to hit this pocket. This pocket was at 480. We got up to 479.7. So that was good. It worked out as planned. And here, if I could pull this up a little bit, could show you some nuances of what happened yesterday. Yesterday, let's see, this is 5 a.m. There we go. Yesterday afternoon, was this it? Yeah, 2 p.m. Oh, there we go. This was it right here. This here was a hoagie. And we had 1, 2, 3, 4, 5, 6, 7, 8. I think I pointed this hoagie out yesterday. Well, that hoagie broke to the upside and held, which was an area I was able to tighten my stops to, and that held all day. And then what's interesting is in the morning we had a nice little pop up here. This was 7 a.m. and 8 a.m. is the pit open, 8 a.m. Central. But if you look very closely to this pop at 7 a.m., where we got to 477.6, and I was thinking, oh my God, was that it? Was that the good enough for the target I was going for as we pulled back? But what you can see is we had a string of down bars. Each of these has a lower low and a lower high, or it's an inside or outside. Now here is an up bar, and here is a down bar. So basically, off of the high that was set, we had a very clean A, B, C. And what that means is below this low, it would be a U-turn where the 5-minute trend is changing from up to down. So once we set this day, this point, that gave me the confidence to move my stops up to here. And when you can move your stop so tight, you can actually size your position up quite a bit. And this bar was the pit session the pit session open, which tends to get volatility, and it went down and tested to within one tick. This low was 469.2. This low was 469.1. So the structure was respected, and from that point we just went higher. And somewhere along here I noticed a hoagie that helped me again add to the position. It was right here. So right after we had that bounce and bounce back down, we had another hoagie right there. And I'll just carry this line out so you can see it. But 1, 2, 3 bars inside, we broke to the upside, did all of this drama, but it's pretty much held. And it held up until we went and hit our target. We got up to 479.7. I was offering out 479 just not to be greedy on a 480 target. And I was actually out to Whole Foods picking up my sandwich. Came back and saw that got taken care of. So that's just a couple of patterns along the way. So we got into this because of the 30-minute pattern after we broke the high of day. Let's go back. So this was yesterday's trade. After we broke 462.5, we had a very clean 30-minute pattern. So that was this right here. 462.5 was the previous day high. We broke it at 2:30 a.m., came down and made this ABC pattern. So this was the initial reason we got in. And then if you remember, this was a relatively wide bar, and we had the EIA release yesterday, so I waited to buy halfway through. So this was the original reason for our trade. It played out partway, by the time yesterday was over, but then continuing to monitor the structure, we had a hoagie that, allowed us to tighten our stops up. And then this morning we had this ABC down off the high, which allowed us to further tighten our stops and add. And then we had a hoagie here, which further allowed us to tighten our stops. And then we eventually got to our target. So that's kind of the active management aspect of how to manage your trade once you put it on. You could just set your multiples and, with an OCO and go play golf, as I say. But, depending on the size you're managing, a lot of other opportunities pop up that are good risk-reward situations to add. Here in this situation, we're talking roughly 3.5 cents, 56.2. So 56.2 against 45.2. So about 3.5 cent stop, and we went from 56 to 80. Or 79 minus 56 is 23 cents on a 3.5 cent stop, about 6.5. So wherever you set your targets, for 4 times your return, 6 times your return, you would have gotten it. And obviously we didn't take out the low, but this active management along the way, while it is a double-edged sword sometimes, can help you just improve your overall stats. As you can add at the right spots and tighten up your risk parameters as you go. So anyway, sorry, let's move on to the next thing we had. So then coming into today, our 2 biggest opportunities were the euro trade, shorting the euro, 6 EM2, 6M2, okay. And the reason we liked this trade was we had a beautiful setup bar. That is a perfect setup bar. Just give me an excuse to go short. And, trying to find the entry did not prove so easy. And that was because we had this fake news spike, whatever it was, at 5:15. We had this on the euro and the indices. But, our typical pattern is to wait till we have that overnight breach and then find our ABC up. And over here, this is a similar high to this. So it was really just one leg up all the way to here. That's an up bar. This is inside up, 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 up again. So that's where the swing technically ends, even though that's higher. So it was only one leg up. If you broke it down to a 10-minute, you got a little more. You got, this became a down bar. So you had this up to here, this down to here, this up to, up to here or here, wherever you want to call it. And then this being a massive hoagie, there were 2 ways you could have traded that. You could have, sold the break of the hoagie, or given that this bar was so wide, again, you could have waited for a retrace into the bar. And we did get just shy of the 50% there. 50% would have been 110.50, and we got to 110.48.5. So again, we've seen that numerous times where sometimes we get to just shy of 50%. I did something different on this because I wasn't watching the 10-minute. I was keeping it to the 15-minute. And I noticed, and then I kept it on the 5-minute, which wouldn't have given you clarity here because there was a lot of jiggles on the way up. But what gave me clarity was this pattern right here. And again, this is not the standard thing that we do. This was a very sloppy situation because of the spike here. So, if you completely missed this, totally understandable. I just found it interesting that we hit exactly 110.105 and we did it again. So I used this hoagie for my entry. There we got 1, 2, 3, 4 bars. So it's like a 25-minute hoagie here. So that got me in at 110.10 with a stop of 110.28. That allowed me to get some decent multiples on the way down here. And another thing I wanted to point out, in terms of searching for a target, and I probably covered too early because it's a Friday. I don't like to overstay my welcome on a Friday. I'd like to really be done trading by noon. But I was just looking at a fib extension of this. And, this is kind of where we had stalled out in the morning. And I was thinking, okay, here's a good level to go. And obviously this would be the next level to go, 35.5. But I went ahead and took my profits as we got to this fib level. And, there was something interesting I noted along the way that helped me cover and then reshort a little higher. And again, this just has to do with how active you want to be and how much you want to optimize. But it was a volume divergence. And let me put my color coding on it. Oh, those are actually the wrong color codes. Full 2RP. There we go. And what it was let's see, 65. Nope, it was earlier in the day. It was before this rally here. And what I had noticed, and again, remember, if it was before this rally here, then we didn't have all this information. We had about this much information. And what I noticed is, as we pushed lower and lower and lower and lower, the volume kept declining. So that was a sign to me that we would, probably get a bounce soon. And I ended up covering somewhere inside this hoagie and riding it up a little bit and reshorting. Big whoop, probably caught 10 or 12 ticks on that. But these are just the little signs that you can watch for to optimize around what you're doing. But don't forget your big play. Your big play is just the fact that this was a beautiful daily setup bar. If we put our scalp indicator on it, we would get an arrow here because that's a beautiful kind of bar that we want to scalp. Where's our scalp indicator? Short scalp. Yes. See, it meets all the criteria that we use to short, to scalp on a 1 minute NASDAQ chart, which is a higher high, higher low red candle. So those were things as it pertained to the euro. The other thing that we did say what we would watch to set up was a long opportunity in gold. And, we had a nice uptrend, one down day, green candle. If we had broken that high, we would have had our 4X setup. Well, that didn't happen. So this morning, I actually caught a trade to the long side on gold. And again, I don't overstay my welcome on these because this isn't something that's in the confirmed in the direction of the daily bars. But it was a very recognizable pattern. And let's see if you recognize it. So this was all below previous day low. But again, this is our divergence. 0.1 over here, corresponding to that. 0.2 over here, corresponding to that. 0.3 over here, corresponding to that. Higher lows in momentum, lower lows in price. So when we had this hoagie set up right here, 2 bars inside, when that broke, that was a good entry. And for me, I just use it as a scalp to get back to previous day low, but it obviously could have been taken for a lot longer. If this is a $7 bar, 67 to 94 is about 27 over 7, almost 4R. But there was just something interesting there. And then even on the 15-minute, you could start to see we didn't have 3 divergences per se, but we had 2. You had this area with a higher momentum here, but lower price. So that divergence was there on multiple time frames. And now for Monday, depending on how this bar settles, it doesn't necessarily have to be green, but green would be nicer. We could have the same setup that we were looking for today play out on Monday. So we'll keep an eye on that. The other thing we talked about yesterday was how the Taylor, and I wanted to expand on the Taylor here. So over here, this was a PF3 down that gave it all it had to the downside. And then the ROC flipped here on this day. So we had a little bit more price movement down, but the momentum stopped going down. And this is just a 2-period rate of change. Then we had our up day. And what would have been the next play is shorting above the high today, looking for a place above today to short for a move back down for the next cycle down, which would be another day down this way, and then another flip. Depending on obviously how it plays out, but that's your typical rhythm. So it got thrown off by the fact that we had one inside day. So you don't really count an inside day, in your count. And we were talking about 43.24 being our place that we wanted to short, and that's about 23. I guess on the pit session we got as high as 43.2675. I thought we got higher than that. Oh, we didn't. Okay, I'm sorry. So, this is a 24-hour, not a pit session. So yeah, we were looking to, if you remember from yesterday's wrap-up video, I said 23.24 is ideally where I'd like to short. But of course, it could go anyway, all the way up to here, up to 50 or 60. Well, we got that. The only difference is we kind of got it not in a way that I expected it. I would have expected a normal open, a move back up, and so from that perspective, it caught me off guard a little bit, because we got it with a large spike in pre-market, and so and this is just a lesson to stay flexible in your mind, because had I been thinking about it at the time, I would have then looked for the RSU sell here, because we got to exactly where we thought we wanted to short. And let me take this up, and we can look at the RSU method for entry. Here's the first bar that went below 70 from above 70. And once we broke below that, ideally you would want to see it break below that sooner, but once we broke below that, it never went back up there again. So that's one way to enter. But yeah, so just stay flexible, because I wasn't thinking it was going to happen in 2 bars like it did, but that did happen. So I did miss out on the majority of the short side trade that we'd thought about. And let's see, what else is setting up for Monday now? Now we have a short in the indices setting up. This happens to be ES, but I bet it looks similar. There we go. This would be Russell, and this would be NASDAQ. Looking at those 3 bars, if this goes outside low 96, nope. I guess it's hard to tell which one is best. They all look pretty good. I would probably stick with the S&P, just because it's often cleaner. So again, if we take that out overnight, Sunday night or whenever, then we'll look for our ABC up for a 4X trade. Gold, same thing, depending on how this candle closes, getting above it could set up our 4X trade with a 2-legged pullback down. And another thing brought up to me by a friend was the letter X. And what I like about letter X, oh my goodness, it already started moving, okay. I thought this would take a little more time to set up, but apparently while I was out to lunch, it started moving. But let me show you what this is, and you'll recognize it from the other patterns that we've looked at. It's basically your cup and handle, right? This, on a 15-minute basis, you have this, and then let's add the volume. And each of these is a box you need to check when you're looking for this pattern. Let me add the a moving average of volume, and we set this to simple 30. So we had this cup, we had higher lows forming, higher lows, higher lows, higher lows. And then today's action, we had a period of time where volatility compressed, where volume compressed, and that was right here as we're forming this handle. And I thought that this pattern here would probably hold all day long and give us the entry on Monday. And it might still, it hasn't really broken out its, we did get a couple of volume pops, but it hasn't broken out handily. And the other thing we look at in here is the ATR 3 versus 20, and we can see it's at 0.597. We want it below about 0.70, so call it right there. So we've had several bars of that happen here. And then I also like to just look at individual bars, and back here we had an individual bar as low as 11 cents. We haven't quite had that yet. This is 11 cents. We got down to a 15-cent bar, 19-cent bar. But basically, a pattern like this is pretty powerful. Once you get this move here, we get a tight entry to a big move here. And if you remember, this was the 20x pattern that we had in gold. Looked just like this. And, so just lucky to spot that this was happening on the 15-minute as a way to enter letter X, US Steel, if it has a daily breakout, which, currently it's hanging out. And again, I wouldn't want to enter it on a Friday and hold it over the weekend. So all I can do is hope that we consolidate more and that consolidation continues Monday morning, and then we get the breakout intraday, and that will allow me to put maximum leverage on it with a tight stop during liquid times. And all of that part is just risk management, right? I mean, in this environment, who wants to hold a large equity position, over a weekend where anything could happen with the geopolitical situation? So anyway, we went over the positions we were holding yesterday. We went over the three top things that we had on our list to look for today, which was the EC short, the GC long, and the ES short. And then we have our list of what we're looking for tomorrow, which is the GC long if it sets up, ES short if it sets up, and this letter X. So anyway, I am going to call it an early day, and have a good weekend. Please subscribe, drop a like, ask me questions. I'm answering all the questions, and part of what I'm trying to do is also take the comments, the questions that come in the comments, and find real life situations to address them daily in the video. So that's part of what I'm starting to do. So if you do have questions, please post them in the comments, and have a good weekend.